Hey, everybody, welcome back. And we have another really great show today. We're going to take you all the way through the metrics. We're going to explain what the heck is going on with mortgage rates. Why did they take one of the biggest leaps that we have seen, well, in 7-8 months? And what's going to happen? Where are we going with the mortgage world? Where are we going in real estate? And, well, let's get the show on the road. Okay, so there's a lot of folks that have been asking, George, what in the heck is going on with these mortgage rates? We were going down, 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 down. In fact, exactly like you said, we would hit into the fives briefly and then whoop, back up again. But, they keep going up. The question is why? So when we take a look at this and we talk about what are mortgage rates doing? What in the world are we going to be looking at as far as the future? Because when we take a look at this chart, you're like, holy crap, man, we went from basically 6%. We're up almost 0.5% at 6.49. Is this going to keep going? What's going to happen? And really at the end of the day, as most folks can tell, look, the Iran war, which caused a significant amount of exclusive upward movement in the interest rates for the entire month of March. The average 30-year fixed rate is actually at its highest for the last 7 or 8 months, even though in the last 4 days it even went up a little bit higher, but then ebbed back down again. Look, until we get a meaningful and lasting de-escalation of the Iran conflict, war, whatever we're calling this thing, we are going to see this volatility. We're seeing it with fuel. We're seeing it with products. The feds are concerned about inflation with everything that's going on. The real question is this going to be a short-term event? Are we going to be able to get this thing rectified? Is what we put into play going to make a difference on an international level? We can only hope so. At this point, we're fully committed, and there's no turning back. So hopefully this has a positive outcome. And if it does, and we are hopeful that it will, then we will actually start to see rates actually start to come back down. We see a lot of that volatility start to level out. Stocks, which have been definitely suffering a little bit of late, will probably start to see, they will see a recovery. So, and like everything, it always goes up and down every day anyway. So let's get the show on the road and move on to the next element, which is our top headline. So here we go. So no surprise, the refi demand basically was sapped by the rate spike. That is 100% given. Refis basically come to a screeching halt. There we go. Builder confidence, funny enough, is still moving right along. And interestingly, we're going to talk a little bit about what's going on, what's happening in the builder time. Is now at the end of March. I don't even know how we got to the end of March. I thought it was just January. Anyway, this year's flying by, but here we go. We've got, is the end of March going to be a really good new construction buying opportunity? We're going to talk about that here in a little bit. Upper right, we can see that our 30-year fix, we tapped out at 6.64. We came back down a little bit, down to about the 6.5 range. And then, of course, rates leap to another multi-month high. So when we talk about what's going on with mortgages, which is a huge driving factor, and here's the funny thing. So remember, even though we got spoiled with the real low sixes, shouldn't say spoiled, that's where we should be, and we've headed back up almost 0.5 point. Look, we're still 0.25% better than we were at this time last year. I know that doesn't mean a whole lot for a lot of you, and that's okay. But the best part is we're still below where we were at last year. Now, if we continue this trend, that number is definitely going to change until we can actually start getting some better metrics, stop this Iran issue. Hopefully they've come to some immediate resolution sooner than later, because at the end of the day, not many people win over this one, right? Okay, as we head over, we can see that we've got that uptick in rate, which is totally normal. But remember, when we talk about what's going on in the market, look at this. So funny enough, when we take a look at average days on market, month over month for the same time frame, our market time, that's the center green chart, is lower by 2 days. Year to date, we are lower by 1 day than where we were at last week, which is excellent. Now, we still have a little bit more time on market than we did this time last year as a whole, but we're gaining ground. Our market velocity is improving. When we talk about the actual list to sales price, that's the same. That hasn't changed over the last 3 weeks, which is really good. So what's important when we take a look at our running 7-day average, we had a huge, and I do mean huge, list time this last week. A lot of folks, we've got Easter coming up this weekend, and so we've got a lot of folks that were getting their home on the market, getting things rolling, and then, pushing off because they know that next weekend it's going to be a very slow weekend, and so they wanted to kind of get ahead of the curve, as they say, or they will wait until the following weekend. But we had a massive number of homes coming on market. When we take a look at it, the pending sales, you know what? They marched right along with it. On Wednesday, we were actually at 1,200 pending sales on the running 7-day average. And of course, each day it readjusts. Friday is always a big day, but we have some really great numbers. With that, we did have about 626 reduced prices. Now, that is not unexpected. We still have a lot of sellers that were really trying to push price. There's a lot of folks out there that say, hey, you know what, George? Here's what we should do. We should overprice our house and just test market. Let's just see what the market says. And unfortunately, that's not a great idea. And the reason is that when you take a look at time on market versus dollars you receive versus what you will negotiate and who's in the driver's seat when negotiating, the more time on market, that goes from the seller to the buyer very quick. So remember, if your home sells in the first 7 to 10 days, you get between 100 and 107% of list price. We have 2 listings that we put on, and that metric absolutely hit every single time. Both of our clients are super ecstatic. They love the fact that, they got to get multiple offers on both of them. Well-priced homes will see multiple offers. But if you miss that mark, you go out to 20 days. Okay, well, now you're only going to see 98 to 96% of list price, plus now you're giving up concessions as a seller. As a buyer, that's absolutely fabulous. And in fact, most buyer clients are saying, hey, listen, wait for somebody to hit that 20-day mark because we know that there's going to be a better price in your future. If you go out to 40 days, okay, well, you're only going to look at 92, 93% of list price. So the takeaway is the more time that you're on market, the less dollars in your pocket. For a buyer, that's exactly what you want. You want that seller to drag out as long as possible before you can jump in because you will get best pricing because we'll start to get seller fatigue. They're going to be like, why isn't my home selling? Why isn't my home selling? And depending on the marketing that's going on or not, most agents don't market at all. They just put it in the MLS, they put up a sign, put a key box and go, hey, buy the house. And that's not what selling is, right? Putting your home in the MLS is not marketing. Make sure that the agent you're working with does marketing. That costs dollars. Anyway, get off my soapbox. If we come back and we take a look at this, we can see that we have, for every home that's coming on market, we are taking one off market. When midweek rolled around, for every home that came on market, we were taking 1.3 homes off the market. And why is that important? Hey, listen, if you are interested in saving money, then you should like, subscribe, and share to the channel. It gives you some really great information. Now, let's roll into what's going on in the residential world. Single family only. Here we go. Center chart. Actually, let me blow this up for you. There we go. Center, let's go with the bottom right. When we talk about the year over year for the same month, hey, listen, even though we are still a few homes less, almost 200, or a little over 200, even though we're a few homes, less, we are doing better as far as for the month than where we were at last week. And when we take a look at the pendant, as you can see, pendant is up 8.8%. for the same month and 21.6% over February. When we take a look at the top chart, which is our year to date, look, we're at 6.1%. So we're still higher. And in fact, even though we are down roughly about, just 490-ish homes, look, we've got, excuse me, we're still down 4.2%, but that is better than we were at last year. And in fact, when we take a look at it, even though sales are down slightly by 4.2%, okay, 4 weeks ago, they were at 5.4, or basically 490 homes. So we have improved that metric. When we talk about pendant, hey, look, we're up 787 homes year to date at 6.1% increase. And then, of course, average time on market is only up by 8 days. Okay, but we're down 10 days from February. So our velocity, our improvement is definitely happening in the market, even though mortgage rates have been heading up. When we take a look at the chart that's above it and the green in the center, you can see that even though our price point for the average sold is down to $2,000. And remember, that doesn't mean your home value went down $2,000. That just means the average of what is sold, which is not unexpected. When we see the first-time home buyers, which that is the metric we're seeing right now, being that dominant 38% of the market, okay, that tells us that we're in a market transition because first-time home buyers bring us into a market and also take us out. Right now, they're bringing us into a better market, and we are seeing that, and that's why we're seeing some of the lower price points, but not horrifically lower. I mean, $2,000 isn't that big of a deal. When we take a look at, if I remove myself here, and we go to the right, look, we're at the same. We're absolutely the same where we were at last week, and we're only off 1.9%. Not a big deal at all. If we take a look at new construction, which this metric is super important because the builders have also been making up ground. Although they've had kind of a slow week this week, they've definitely been making up ground. Definitely there are incentives. This week, right now, is the time to look at and negotiate. If you are looking at new construction, there's the most motivated right now to give you the best terms. Now, with that being said, make sure you're working with an agent that understands new construction, or you'll be leaving tens of thousands of dollars on the table. And don't think that the side agent is your best friend. They get paid a bonus for saving the builder money. I'm just saying, that's like having the prosecutor represent you in a law case. That doesn't make a lot of sense, right? Anyway, just saying, keep that in mind. So as we come back and we take a look at that, we did kind of step back on sales this week. That's the whoops on the far. Well, let me open this up. That's the whoops on the top chart there. Understand, new construction. People have been pulling away from new construction because they are looking at all of the new inventory that's coming on market that is closer, bigger yards. There's things that they can do. They don't have to reach out the window, grab somebody else's salt shaker. And I get that. But there's still a lot of new product out there that you guys need to take a look at, and might be something of interest for you. If you need a list, just head over to our website, and we have a new construction list, and you can take a look at those by area. Simple enough. Now, as we roll along, let's talk a little bit about, hang on, let's bring this back. When we talk about basically the average sold price, everything has stayed the same. We are definitely better than where we were at in February. Not much has changed at all. They are still at the same list sales price. So pretty straightforward, pretty simple. When we roll over into the real estate owned world, some folks are saying, George, what the heck? Why do we have such, why do we have a 50% increase in foreclosures? Well, it's only 47 homes year over year. And that's really not a lot, just saying. We are still one of the 5 sweet spots across the United States. Sadly, I think we're just cresting into the #1 position for having the greatest number of taxes and the most expensive state to live in, which that in the people in Olympia, they just need to understand that being #1 at some things is not a great idea. Humbly saying, they will continue to exacerbate this issue as they continue to take more and more dollars out of people's pockets, even though they say they are hitting a certain demographic. That is false. Anyway, false narratives are what our government is sometimes very good at. I will get off my soapbox. But anyway, as we roll in, we can see that our numbers still for foreclosures are still super low. REOs are down when we consider the peaks that we saw through 2008 to 2011. And in fact, we would see this many days coming on market in a day instead of this just being our overall inventory. So if you have any questions, absolutely reach out to us. Put down below any question that you would like to have answered. If there's an equity evaluation you want to have done as far as what's going on or what should you do with your home, look, just schedule it. There's no cost. We have vendors that are pre-vetted and pre-screened just for you. And you get our pricing, which is a discounted pricing for your benefit. In the meantime, it's going to be an absolutely beautiful day. I will see you on the next video. Remember to subscribe, and I'll check with you at a later date. Take care.